Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first, we will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting to the upside a quite strong historical support and demand area. From here, in fact, all these previous rejections to the downside have been created, confirming this zone is a quite strong supply and resistance area. Then the market with this impulse broke above that zone. So all that previous resistance was broken to the upside. And when the market here went and retested the area, that previous resistance was turned support. The market tested the previous resistance, turned support, and is currently still rejecting it to the upside. We can also notice that from a pattern standpoint, if you have an impulse to the upside and then a correction, if you want to measure that correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements that were lining up exactly with that previous level of resistance, which was after the break to the upside turned support. And that means that inside of here, we actually had confluence of support because we had multiple layers of support lining up in the same area of price. And that means that you have a confluence of support. And inside of a confluence of support area, you have an increased probability of getting institutional longing. And we will be speaking about institutional longing later on during the analysis. But for now, let's keep in mind that the market is rejecting to the upside a confluence of support zone with good probabilities that we did see institutional buying inside of that confluence area. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, the situation is quite clear. We have a market which is currently stuck in a weekly range. We have the top of the range here and we have the bottom of the range here. The top of the range has already acted as resistance twice. The bottom of the range has already acted as support already 3 times. And currently the market is headed towards a test of the high of the range, essentially for the test, the 3rd time of the top of this weekly range. Now, until the market will remain bounded in between these two levels, we could simply expect to see more horizontal price action because when the market is in a range, it's supposed to continue to move sideways. And it is also important to keep in mind that in creating this push to the upside, the market is also creating this W formation. So when the market will actually reach the high of this range, there's a good probability at that point to see a correction to the downside for the market to go and complete the W formation at the neckline, because after the creation of a W, what you would expect is for the market to create a potential rejection to the downside, completing the W formation at the neckline. That is how most of the times this pattern plays out in the market. However, at the moment, the market is still a bullish market, and there is definitely still room for more bullish continuation for the market to go and test the high of this range. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, the situation is quite clear. We have a market which has just created a very strong impulse to the upside, breaking above structure. In fact, Now, this previous daily resistance from which all this move to the downside was created is now turned support. So if the market will now go for a retest of this level, this previous resistance should be acting as support. And we can also notice that since there is an impulse, if we want to measure the correction, as we did previously on the monthly, we would have to take our Fibonacci from the low to the high of this impulse leg, showing us how we have a 0.32 50% and 0.618 Fibonacci retracements in this area, lining up exactly with this previous daily resistance, which is now turned support, again creating confluence of support. Now, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing on gold. And what we can see here is that with the last reports, net positions have been massively increased. We went from having 131.1k net positions, so a fairly negative net positioning, all the way up to now having a very positive net positioning with 246k longs. 246k net positions, meaning that we have way more longs than shorts from an institutional perspective, with institutions having 284k longs compared to only 38.6k shorts. So clearly, institutions went from having a situation where we had a not very bullish net positioning to now having a very bullish net positioning with way more longs than shorts. So they have been increasing their longs and decreasing their shorts. We can see here that already here we had 74k shorts. Now we have only 38k shorts from an institutional perspective. So they are closing their shorts and they have a massive amount of longs. That is obviously bullish for gold. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, from a daily perspective, if the market will now correct to this area, what would I expect? Well, if the market will correct to this confluence of support, there's a good probability to see even more institutional longing. So, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the technical and directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes. So 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside, and for the market to go and test the high of that weekly range that we have previously identified. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below and I will see you in my next video.